All right, we're on learning objective 10.3, and now we're going to learn to journalize a disposal of a plant asset. Okay, so eventually the assets wear out or become obsolete, sorry. The business then has several options. They can discard it, they can just throw it away. Sometimes that's not possible, especially if it's something that might have like chemicals in it. We can't just throw it in the trash. Okay. We may sell a plant asset or we may exchange it for another asset. Okay. So, what do we do when it comes time to dispose of a plant asset? The first thing we are always going to do is bring the depreciation up to date. Okay. Then we're going to remove the old disposed asset and the accumulated depreciation from the books. Remember we have the plant asset, and then we have the accumulated depreciation, which equals the book value. Both of those have to leave. Remember, I said till death do them part, here's death. They have to go together. They have to go away together. Okay. We're going to record any cash that we receive from the disposal. So if we sell it, we'll get some cash. We may take a vehicle to a junkyard and sell it for scrap metal. That would be the cash that we're going to get for that. Okay. Any difference will be recorded as a gain or a loss. Okay. So we have an example here. July 1st, Smart Touch Learning discards the equipment with a cost and an accumulated depreciation of 10,000. So 10,000 is the asset minus 10,000 gives us a zero book value. Okay. Zero book value. So we are going to make the entry, and that entry will be to debit the accumulated depreciation and credit the equipment. We're making this go away. Okay. Because accumulated depreciation, let's see if I can find it really quick where I drew those T accounts right there. Truck has a normal debit balance. The accumulated depreciation has a normal credit balance. So we're going to zero out those two accounts and get rid of them. Okay. This is the easiest one possible because we don't have any other accounts to deal with. Okay. So let's try another one. Okay. And they give us the nice little T accounts. I think that might be better than mine. Okay. So then the next one, we're going to suppose instead that on July 1st, Smart Touch Learning discarded the equipment, which had a cost of 10,000 and is not fully depreciated. So there is an accumulated depreciation of 8,000. When you get one like this, I would draw these T accounts out because it's going to help you. It's going to help you make the journal entries. Okay. So it had a cost of 10,000. It had accumulated depreciation of 8,000. Notice that they tell us what the annual depreciation is of 1,000. Okay, on July 1st. So we're going to depreciate. We're going to go ahead and record depreciation for $500, half of that year. That is the first entry. Okay, I'm just going to plug that 500 in right there because we used it for half the year. So we want to make sure that we get that depreciation on our books. Okay. Then the next step, we didn't get any cash for it. So we've got the asset. I'll just come down here and use theirs. We are not getting anything. We're not getting cash. So we're not getting another a piece of equipment, cash, or anything like that. And so our book value is $1,500. And they say gain or loss. If it's in parentheses, it's a loss. Gain would be positive. Okay. The first thing I would do when you get a problem like this, let's come back up here. The first thing, because remember, I've told you a lot of times, sometimes figure out what you know, and then the things you don't know, you might guess, but get the things that you do know. Okay. we're going to make the equipment go away. So we're going to credit the equipment and we're going to debit accumulated depreciation. Okay, so get those first. Let's mark that out real quick. Okay, we know it's 1500. So we debited the accumulated depreciation and we credited the equipment. We're discarding it till married, till death do them part. Here's where they're leaving and they're dying. Okay, so we didn't get anything, so we end up with a loss on disposal. If you don't have a clue what account that is, if you need a debit, it will be a loss. If you need a credit, then it will be a gain. Okay. All right. So now let's talk about selling a plant asset. So on July 1st, the company sells the equipment with a historical cost of 10,000, accumulated depreciation as of December 31st the previous year of 8,000, annual depreciation of 1,000. So we are bringing the depreciation up to date again. Okay. So we're still sitting out there with equipment of 10,000 and accumulated depreciation of 8,500. So we have a book value of 1,500. Got to bring that up to date. And then it says, suppose that Smart Touch Learning sells the equipment for $1,500. Okay. Remember that journal entry. Back up here, figure out what you've got, figure out your equipment and your accumulated depreciation, which will be in the next journal entry. Okay. I think I went too far. Sorry. So suppose that I messed up on something somewhere. It says they sell the equipment for 1,500, but I think that might be wrong because they've got 4,000 right there. Let me just glance at that journal entry really quick. That 4,000 is actually a wrong number. That should be the 1,500. Okay, because you wouldn't get zero gain or loss if that number was 4,000. So just a little disclaimer, sometimes the books make a mistake. So now there's no gain or loss because we got exactly how much cash we were carrying it on the books as. Okay. All right. Now we're going to sell the plant asset above book value. So I think this is where their 4,000 came in and they probably just copied and pasted that up there. So it's easily done. I know I'm never perfect 100% of the time. I try to have grace as y'all have had grace on me in messing up things. All right. So we are still looking at the book value of 1,500, but now instead of selling it for 1,500, we're going to get $4,000. We've got a gain now. A gain is great. Okay. So you've got a lot of moving parts on this one. Figure out your cash, figure out your your equipment and accumulated depreciation. Figure those three things out. Okay. Which, there we go. We're going to debit cash for 4,000, debit accumulated depreciation 8,500, credit equipment for 10,000, and we're going to credit gain on disposal. Remember earlier I told you if you need a credit, it's a gain. Okay. If you need a debit, it's a loss. Okay. Because sometimes these can get a little confusing right here, but if you just dive in and make that journal entry and you really don't have a clue, if you need whatever you need to balance, that will help you name the account. Okay. Now we're going to sell it below book value. So we are selling it at 500 now. Still looking at the exact same book value of 1,500. We got a little bit of money. Sometimes a little money is better than no money. Okay. So you've got your cash, you want to take out your accumulated depreciation and your equipment, and now Remember, even if you don't know, if you need a debit, then it's going to be a loss. Even though you calculated it above, they problem might not ask you to do that calculation. They might just dive in and tell you to make the journal entry. Okay. All right. So here's a quick summary of everything that we just did. Okay. And all those journal entries. All right. We got one more video after this. We'll do 10.4 and 10.5 in the last video for chapter 10 and the last video for Principles of Accounting 1. Yay!